or wherever you may be, you will be able to do it without a hitch. We wish to encourage you to please strive to file your return before the deadline, that is 30th June 2025, so that you may avoid the unpleasant penalties and interests that come as a consequence of non-compliance. So it's important that even as we provide this guide, put that in mind so that at the end of the day, you will work towards being compliant. We are also going to encourage you as we go through the session that you interact with us through the chat section so that we may continue to address any queries or concerns that will arise. And even at the tail end of this session, we will be at hand to comprehensively address any outstanding issues. Karibuni sana, and we wish you a fruitful engagement. Over to you, Mendy.
Thank you very much, Madam A. Much appreciated. We thank you for your opening remarks and officially giving us the go-ahead, and again emphasizing the importance of filing our 2024 returns long before the deadline of June 30th, 2024. So just before I welcome our lead trainer for the day, Mr. Joseph Mashaga, who I'll request at this point to place the presentation in full screen mode. We are today joined by a big team from the taxpayer education team, including Mr. Stephen Mwaniki, Maureen Otieno. We also have Irene Mombi and Karana Mushiri on standby to respond to questions, comments, or concerns that you might have. So I kindly request that you utilize the Q&A and not the chat to post questions, comments, and concerns, and then it'll be easier to respond and track them from there. So you can utilize the Q&A functionality on your screen to post, to channel those comments, questions, and concerns to us. We are also joined by a team from our marketing team, Madam Faith Cheptile. She is also providing sign language interpretation today. So a big thank you to you, Madam Faith. And we're also joined by Cynthia Kerubo from the marketing team. So a big team all on hand to support you all, our sincere taxpayers, and notify you of the importance of filing and some other key programs that are ongoing, including the tax amnesty that I know our colleague will touch on shortly. So without further ado, Mr. Joseph Mashaga, good morning to you once again, and karibu sana for the presentation.
Thank you, Medi. Is the presentation visible?
Yes, I confirm we can see and you're loud and clear.
Okay, thank you very much. And once again, welcome so much our dear taxpayers to this session today, where we'll be looking at the filing of the 2024 individual income tax return. We'll start with a brief presentation on the aspects, just to understand various aspects of the income tax return, after which then we'll go to the step-by-step guide on how to file the return. And majorly today, we will focus on employment income, but we'll also briefly touch on those people that have other sources of income, what they are expected to do. Well, what is an income tax return? We want to just understand some of the aspects of income tax return, as I said. And basically, this is a declaration that is made by a person or a taxpayer, which shows all the income that they earned from the various sources and the self-assessed tax that is paid during that year of income. Remember, our country, Kenya, operates a self-assessed system of taxation, whereby as a taxpayer, you self-assess yourself and determine the tax that is payable, and then remit that to Kenya Revenue Authority, the one that is in charge of collection of revenue. So that return, therefore, that declaration of your income and the tax that you have self-assessed is basically what is an income tax return. And in this case, in our discussion today, we are focusing on the period starting from 1st of January to 31st of December 2024. So declaration of the income and self-assessing the tax that relates to from the period from 1st of January to 31st of December 2024. Someone may ask, why do we file returns? Sometimes people ask, especially for employment income, my employer has already deducted my tax at source and remitted to KRA why then do I have to still file the returns? It is important to appreciate the filing of return comes with its own benefits, and also appreciate that it is something that is required by law under the Income Tax Act. It is a requirement that you file your return, you assess your return, because you assess your taxes, because remember, in as much as our system is a self-assessed tax, KRA goes further to conduct compliance checks or audits to then confirm the accuracy of the returns that have been filed. So number one, it is very important to file because it is a requirement by law. Number two, from your self-assessment return that you file, it enables you to know how much KRA owes you, if any. We could have cases of overtaxation, maybe in the course of your employment during the year. For one reason or the other, you are overtaxed, or maybe there was an oversight of a certain relief or a certain deduction that was supposed to be given by the employer, but they did not do that. So the moment then you file your return, you are able to, the system compares, looks at your income, how much tax you are supposed to pay in relation to the prevailing laws, and then what was the actual tax that was deducted from you. So in the event then that you are overtaxed, that would mean KRA owes you a refund, and that is only going to be known or identified after you have filed your return. So that is why, again, it is very important to file a return. It also enables you to know if you have any tax due, and if so, how much. Just like we are talking about an over taxation that could have happened, we could also have a situation whereby you are undertaxed, meaning instead of maybe deduction of the right amount of pay as you earn or income, employment income tax, there was another taxation. In that case, you will be owing some tax to KRA, and that can only again be established through filing of the return, because the return takes your income, computes the tax that was supposed to be paid, and looks at now the income that was actually paid. Where there is another taxation, then you know I owe this much, and you are now able to remit it to ensure that you are compliant. It's also, filing of return also enables KRA to identify those who do not pay taxes. Remember, payment of taxes is starting from the point of filing the return, because we said you are self-assessing yourself through the return to determine the tax that is payable. So in the event then one does not file the return, it shows that they are not compliant, they are not paying taxes, and of course now the provisions that are there in the various laws take effect in terms of engaging the taxpayer to know why they are not filing, why they are not paying taxes. In case it's out of any challenge in terms of capacity, we are able to facilitate them and follow up to ensure that there is compliance, because on our side, it's in our interest also to ensure that we facilitate the taxpayers to be compliant. And finally, filing of taxes also enhances transparency in taxation, as well as improved compliance in respect to return filing and full disclosure. As in, there is transparency in the aspect that there is, if, for example, we are talking about employment income, there is a standard way, there are the rates, there is a graduated scale that is applied when taxing various employees. And that means employee A is going to be assessed like employee B using the same rates that are applicable. So in terms of now you declaring a return, and every other taxpayer who is earning employment income, like we are discussing in this case, declaring that income, it is very transparent in the sense that what taxpayer A, who is in the same situation or circumstances as taxpayer B, paid as tax, is what taxpayer B is also going to pay. So that transparency and full disclosure is very, very important to ensure compliance, because compliance is all about declaration of your income, and sometimes we have the claiming of expenses if they are there. So that full disclosure then becomes very important to ensure transparency in taxation. So that is why even after our income has been taxed at source, deducted tax at source, which is very then important to file a tax return. Then who should file a return? Who should file a return? Every person, whether it's an individual, a company, or a partnership with a KRA PIN, is required to file a tax return. So as long as you have a KRA PIN, you are supposed to file a return. If you are an individual, you file the return for an individual. If you're a company, you're supposed to file a return for a company. If it's a partnership, you also file a return for a partnership. But then the question also comes, if you do not have any income, like in this case, 2024, you did not have any income in the year in question, do you still have to file an income tax return? And the answer is yes, because you said the one who is supposed to file a return is basically everyone who has a PIN. So it will go now, the next thing would be to determine if you don't have an income, what kind of a return are you going to file? If you had an income, what kind of a return are you going to file? And so even if you did not have any income last year, the year 2024, you are supposed to file a return. In this case, you will file a nil return. And we are going to see how to go about that. It's a declaration that you did not have any income and therefore there is no tax payable. But now for the one that has earned income in the year, they are supposed to declare that particular income and self-assess the tax due and go ahead and pay in case there is any that was not deducted at source. What do you need to file your return? And today, remember, we said we are focusing on employment income for individuals. So for you to file the individual income tax return for employment, you need a P9 form from your employer. And this P9 is a document that shows a summary of your income throughout the year and the deductions that were made by your employer during that particular period. In this case, it is 2024. So we'll be looking at a sample of a P9. So you need your employer needs to show from January to December, this is the income, these are the deductions, this is the tax that was deducted and remitted. These are the reliefs that applied during that year. So that form, that P9 form, is very comprehensive in terms of the income, the deductions, the reliefs, and eventually the tax that is payable. Now, in the event one has an insurance policy, they would need that policy certificate because we have an insurance relief that for you to claim it, you need then to declare the details of that particular insurance policy. For someone who has a mortgage that they are servicing, because we have mortgage interest as an allowable deduction, that means it reduces your taxable income. You need to have that mortgage certificate because it is a requirement to declare the details of the mortgage for you to then benefit from the mortgage interest deduction. For those people that are having a tax exemption certificate, maybe an example, people with disability, you need that particular tax certificate because the return form will require you to input the exemption certificate number so that your income is treated differently, putting into consideration that you are exempted from tax. So with those documents, then you'll be good to go to file your individual income tax relating to employment income. And in the event that you earn employment income and you also have other sources of income, business income, farming income, rental income, and you are not accounting for this business income or rental income in the monthly regime. For business income, for example, you are not accounting for it under the turnover tax, which is a monthly regime and it is final. You have residential rental income, and you are not accounting for it in the monthly regime, the MRI, which is final. Then you are supposed to come and declare those other sources of income in your return. So you declare the employment income, and again, also declare the other sources of income. And this income is going to be put together and taxed together using the graduated scale for individuals. So that is very important to note. there are those people who have withholding tax certificates. How do they file the returns? It is important to know that where the tax withheld is not final, you prepare a summary of the income received as per the withholding certificates and file a return that includes that income. What we are saying here, you could be an individual and maybe you are offering over and above your employment income, you're offering some professional services, management and consultancy services, and you earn from offering those services. And because these are services from which we withholding income tax, which is not final, a certificate will be issued when that particular income tax is withheld. Now, when declaring your income for the year or when filing your income for that specific year, you are supposed to put together, have a summary of what is the income that you earned from this certificate, what is the income that relates to all these certificates. You declare it. So you'll be selecting that you have other sources of income and then declare the income earned. The withholding certificate will be used because this is already tax that was withheld from you and paid on your behalf by the one who was making the payment to you. It will be available as a credit. It will be available as a credit to reduce the tax that is payable after you have filed your return. However, we have instances where the withholding income tax withheld is final. We are talking about you have earned interest from the money market funds or the T-bills and all that, and tax was withheld from you as an individual. Because that withholding tax on that interest is final, you are not required to declare it again in your income tax return. So where the income tax withheld is final and majorly for interest, because interest received by resident individual, we call it a qualifying interest, it is final. So you are not going to declare it again. The 15% withheld is final. So in that case, you don't declare it. But where the interest, where the withholding is relating to other services like management, professional or consultancy services, you need to declare that income. I know currently there is an issue that we are handling, whereby there are some individuals who are issued with withholding tax certificates for interest and from the treasury bills. That was erroneous, and we are working on it so that CBK is able to revert that to record the withholding certificates, because as it is now, because the certificates were issued, the return, in the return, you are supposed to declare that income, which is not supposed to be the case. So what we are saying to those people that received certificates in relating to interest and from the treasury bills, we are saying just hold on a bit before you file. It's something that we are looking forward to finalize very soon, so that now the withholding certificates are recorded, and then you will not be required to declare that particular income. As a summary, just key things to remember as you file your tax return, key things that you need to remember. If you make a mistake while filing, you can file an amended return. In the event you have submitted your return and you realize that there is a mistake that you did, it could be an arithmetic error, or there's something that you omitted, then you have one option to amend the return. So you can amend and correct any error that you made while filing your original return. If you are employed in 2024, then lost your job, you are still required to file a return for that year. So what we are saying here, in the event that you are not employed fully for employment income, maybe in 2024, you only worked for 3 months, 2 months, 1 month. In as much as you did not work for the whole year, you are not employed for the whole year, again, you are supposed to declare that income for those few months that you worked. And in that case also, we are saying the employer is supposed to issue you with a P9, which is showing the income and the tax for those particular months that you worked. If you had multiple employers in 2024, you are required to file a return to show all income received from your employers. It could be you are a primary employee in one organization, and then you are a secondary employee in another, and maybe even a secondary employee in another organization. So where you had multiple employers, it is important to know in the return, as we are going to see, you declare the income line item as a line item. The income that you earned from the various employers, you declare it in the return, and the income is going to be taxed together. And the tax, if it was then deducted that it's supposed to be, there will be no tax to pay. If there is any other taxation or over taxation, as we mentioned, that again is going to be addressed after the return has been filed. As I mentioned earlier also, if you had no income in 2024, you are required to file a nil return. If you are employed and have other sources of income, maybe from your side hustles, you are still required to declare them in addition to the income you get from your job. I have mentioned that. And we are going to see how to declare the other sources of income, which, as I emphasized, were not taxed in the monthly regime, for example, turnover tax or monthly residential income tax. If you are a beneficiary of an estate, you are required to file a return. There's a provision for that. If you are a partner in a partnership firm, you are also required to file your returns. Remember how partnership operates is that in as much as the partnership is going to file the income tax return for the partnership, the profit is distributed. The income is normally distributed to the partners, and it is the individual partners who account for tax, who pay tax of the income that they receive from their partnership. So if you are a partner in a partnership, again, there's a provision for you to file your income to file the return to capture the partnership income. If you earned any foreign income in 2024, you are also required to declare that income in your return. Now, Kenya operates what we call a source-based taxation system. Income is only taxed in Kenya if it was derived from Kenya or accrued in Kenya. But we have an exemption when it comes to employment income. The employment income of resident individuals is taxed. The global income is what is taxed, in as much as some of this income was not earned in Kenya. If one is a resident individual in Kenya and they have earned employment income in Kenya and employment income in UK or any other country, all that income is supposed to be declared in your individual income tax resident return. And then what will happen, because the income earned from the other jurisdiction was also taxed, there will be a provision for credits. The tax that was paid in the other jurisdictions is going to be allowed as a credit to reduce the tax that is payable. So, or the global income of a resident individual, the employment income, is taxed in Kenya, but credits are allowed to avoid double taxation. And we will highlight that in the return. And in case you have any challenge, then in your filing, even after this discussion, you could engage us through an email to our call center callcenter@kra.go.ke. You could call that number 0711099999, or you could visit any of our tax service offices, our TSOs, or even our service desks in the Huduma centers, so you can be facilitated anywhere across the country where you have any challenge. And again, remember, in the event you forget your password, sometimes we have people forgetting the password, maybe the